This mini presentation is going to go into detail about accrual versus cash-based accounting methods. Accrual-based accounting. Under the accrual basis of accounting, revenues are reported on the income statement in the period in which they are earned. The accounting concept supporting the reporting of revenues when they are earned, regardless of when cash is received, is called the revenue recognition concept. Revenue are our sales or our fees earned for services that we perform. We may perform services or make a sale without actually receiving cash. This is the accounts receivable. Under accrual basis, we are allowed to record that as a sale for income purposes. The accounting period concept requires that revenues and expenses be reported in the proper period. We also will look at the top, it says matching principle. This is also called the expense recognition principle. When we talk about matching principle, what we mean is that our sales made in a certain accounting period are matched with the expenses in that accounting period. The expenses are the items that we used up to make that sale. So in accrual-based accounting, we must have these together in the same period to give us an accurate picture of our net income for the period. Cash basis. Under the cash basis of accounting, revenues and expenses are reported on the income statement in the period in which cash is received or paid. Many small businesses use a cash basis system. They will record a sale when they receive the cash, and they will record the expenses when they pay out the cash. Let's look at an example. Accrual or cash. If rent for May is paid on June 1st, in which month would it be reported as an expense under A, the accrual basis, and then we're going to look at B, the cash basis. Under the accrual basis of accounting, rent for May is paid on June 1st. What month are we going to record this as an expense? Accrual basis. It's going to be May. Why? Rent for May. It's for that month. Under B, cash basis. When would we record this rent expense under the cash basis? June, that's correct. Why? Because we paid it on June 1st. So you'll notice the difference here. Accrual basis is actually for a time period. An expense that's happening for this time period. The revenue was recognized in that time period. Or on the other hand, we have cash. Cash definitely has to deal with the words paid or received. So I think you can get some clues when you're looking at cash versus accrual. Cash or accrual. Let's look again. This is a little trickier. If a university received cash in August for football season tickets, when should this be reported as revenue under the accrual basis and cash basis? Let's look at accrual basis. When would you receive or report the money received for season football tickets? It's a hard one. It's actually as the season progresses. So as games are played. And under the cash basis, August. That's correct. Because we received the cash in August. FASB and International Accounting Standards Board. Under FASB US GAAP and under IFRS, International Financial Reporting Standards, both of them require that the accrual basis of accounting be used. This ends our mini presentation on accrual and cash basis accounting. I hope that you have enjoyed it.